It's the morning after the Monetary Policy Committee of the Central Bank of Nigeria raised the interest rate, and not just that, increased the deposit bank's cash reserve ratio. Find out how it affects you on today's episode of Business Morning. Good morning and welcome. I'm Ini John Mekwa. Just before we delve into that, let's see what's happening in the commodity space, starting by with oil. Prices fell by more than 1% on Wednesday, pressured by a threatening dollar and crude storage bills that offset support from U.S. production cuts caused by Hurricane Ian. Brent's crude futures fell by $1.20 to $85.07 a barrel, while U.S. West Texas Intermediate crude futures lost $1.06 at $77.44 a barrel. Producers began returning workers to offshore oil platforms after shutting it in output ahead of Hurricane Ian, which entered the U.S. Gulf of Mexico on Tuesday and is forecast to become a dangerous Category 4 storm over the warm waters of the Gulf. About 190,000 barrels per day of oil production, that's about 11% of the Gulf's total, were shut in, according to offshore regulator, the Bureau of Safety and Environmental Enforcement. Producers lost 184 million cubic feet of natural gas, which is nearly 9% of daily output. Personnel were evacuated from 14 production platforms and rigs. Ian is the first hurricane this year to disrupt oil and gas production in the U.S. Gulf of Mexico, which produces about 15% of the nation's crude oil and 5% of dry natural gas. Commodities still. Malaysian palm oil futures fell by a fifth straight session today, tracking weaker rival oils, while lingering concerns of oversupply also weighed on prices. The benchmark palm oil contract for December delivery on the Bursa Malaysia Derivatives Exchange fell by 1.5% to 3,470 ringgit per ton in early trade. The contract lost more than 9% in the previous 4 sessions. Dalian's most active soy oil contract fell by 0.25%, while its palm oil contract dropped by 1.08%. Soy oil prices on the Chicago Board of Trade were trading 0.46% lower. Palm oil is affected by price movement in related oils as they compete for a share in the global vegetable oils market. Export of Malaysian palm oil products for September 1st to 25th rose between 18.6% and 20.9% from a month ago figures. Palm oil may retest a support at 3,427 ringgit per ton. A break below could open the way towards another. Back here in Nigeria, the Central Bank of Nigeria has directed commercial banks in the country to meet its new cash reserve requirements by Thursday or face debit and exclusion from accessing the country's foreign exchange market by Friday. The CBN Governor Godwin Emefiele gave the warning to banks at the end of yesterday's monetary policy meeting, where it raised the CRR from 27.5% to 32.5%. While explaining how its latest rate hike will reduce inflationary pressure, Mr. Emefiele says the increase in the CRR is aimed at mopping up liquidity in the banking system. However, analysts say the timeline given to banks for compliance with the new CRR may unsettle some banks, as not all of them have the capacity to absorb such regulatory shocks at very short notice. Cash reserve ratio, which is the percentage share of a bank's total customer deposits, which must be maintained with the CBN, is one of the ways CBN regulates the country's money supply, inflation level, and liquidity in the country. And still talking about yesterday's MPC, for the third time this year, the Central Bank of Nigeria raised interest rates, and it went from 14% to 15.5%. It was a long one yesterday. Here are the details from that MPC meeting.
Behind closed doors, the governor of the Central Bank of Nigeria is leading members of the Monetary Policy Committee to address Nigerians on his key decisions. The central bank governor starts the meeting with a look at how events in the international market are affecting the domestic market, leading to the bank's intervention in the real sector, rising to 9 trillion naira in 3 years. While the agriculture and manufacturing sector received 66 billion naira in 2 months, its export facilitation program received a boost of 93 billion naira.
In the last 3 years, the CBN had injected over 9 trillion naira into the economy, in addition to offering 2-year moratorium for 10-year long-term loan facilities. The committee believed that these interventions have significantly helped to engender growth. However, in light of the persisting pressures on inflation, the committee encouraged the bank to maintain a close watch on the inflationary implications of these interventions.
The committee then raised the interest rate to 15.5% and the cash reserve ratio to 32.5% after consideration by committee members. However, it comes with a caution for commercial banks.
As long as we see inflation trending upwards, that I cannot, or that MPC cannot give any assurance to anybody that we will not continue to raise rates, because we've seen rates move recently very, very aggressively, and that is the reason we are following it up in the May, in the July, and now the September meeting very aggressively for us to ensure, to see to what can be done to rein in inflation.
The committee also considered the intervention to clear the backlog of debts owed airlines.
Yes, we will do everything possible, and we are determined to clear the backlog, and we will consistently at all the retail interventions. As long as the accounts of the banks are funded, we will continue to make the releases to ensure that the cumulative backlog is cleared. We would like to appeal to the countries where the foreign airlines are domiciled or where their flights originate, that they should please, and we please beg them to give Nigerian airlines also a chance to land their aircrafts in their countries.
This is the third time the Central Bank of Nigeria is increasing its monetary policy rate in 2022, as the bank insists on an economic stability plan that is responsive to Nigeria's economic growth.
That's right. It's 150 basis points hike on the monetary policy rates, taking it from 14% to 15.5%, while the cash reserve ratio is now at a minimum of 32.5%. All this to curb inflation, which for August was 20.52. Well, I wonder what it will come to at the end of September. Anyways, this is the decision from the monetary policy for the month of September, the meeting that ended yesterday. What should Nigerians expect from this? We have Damilare Ojo. He's the team lead at Meristem, joining us for that conversation. Hi, Damilare. Good morning.
Good morning, Ini. Thank you for having me.
Good to have you. So I don't think anyone is saying anything or having any other conversation apart from this at this time, at least. Going from 14 to 15.5, that's 150 basis points. And I think another one that seemed unexpected was the CRR, the cash reserve ratio, which of course is now at 32.5% minimum. Explain to us, or explain to Nigerians now, why is this important? Why should they know about this? How is this going to affect them, affect their purchasing power, affect their economy?
Thank you very much once again for having me to discuss this. I mean, what happened yesterday was, I would call it another major policy shift that we have in Nigeria. Of course, right from May, the Monetary Policy Committee of the Central Bank has consistently been increasing the benchmark rate, which we call the monetary policy rate, the MPR. And I mean, the year started with the MPR at 11.5%. And by the meeting of May, we saw a 150 bips increase. By July, another increase, which was 100 bips. And then just yesterday, another 150 bips increase, which now brings the MPR to 15.5%. And as the CBN governor mentioned, the major focus of the CBN, I mean the monetary policy now, is on combating inflation, on fighting inflation. And what we've just seen is an aggressive stance towards bringing inflation down in Nigeria. But I would say that the other one that we saw yesterday, which I don't think anybody was expecting, was the increase in the cash reserve ratio, the CRR, by 500 basis points to 32.5%. And I think that, that is just still, a move to mop up system liquidity, because in Nigeria, or generally in any economy, one of the things that fuel inflation is the amount of liquidity in the system. So, maybe by the CBN's assessment, banks have a lot of liquidity, and because of that, that is one of the things that is fueling inflation in Nigeria. So I think that is why the CBN has come out and say that we are increasing the CRR as well. And what does this mean for Nigerians? I think that the major things that Nigerians should be looking at, or that we should be worried about, is our GDP, our economic growth. And I say that because one of the data points that we look out to measure GDP as a leading economic indicator is the Purchaser Managers Index, which is we call the PMI. And when you look at the trend in the PMI in the last 3 months, from June, we observe that there have been, consistent decline in the PMI. And more interesting, or more, not interesting, I would say worrisome, is the fact that in August, the PMI is now below 50 points mark. 50 is like a benchmark below which we talk of decline in economic activities. So if that continues, if PMI continues to decline, what we are likely to see is that our economic growth is likely to reduce. For Q3, we are likely to see a slowdown in growth, and maybe if inflation continues to increase and the CBN also continues its aggressive stance, it's only a matter of time before we see that means for Nigerians.
Okay, but the thing is, isn't it kind of contradictory? The CBN is aggressive about mopping up liquidity from the economy, so we see not just the interest rate now, but also the cash reserve, meaning that banks will have less funds to give to the public. But at the same time, the CBN is through its intervention, it's also sending out liquidity into the same economy. So isn't it kind of contradictory? Isn't that also feeding into the inflationary pressure that we are talking about and trying to deal with?
Yeah, you are very right, and it's a bit. I would just say that for the CBN, I think that from the point of view of the monetary policy rates, I would say the actions that we saw yesterday is like a double-edged sword for banks, in terms of the fact that increase in the monetary policy rate is positive for banks. They can increase the rate on their loans. The rates that they charge on their loans is going to be higher, which would mean increase in interest income for them, all things being equal. But now all things is no longer equal, because the CRR has also been increased, which means that the amount of cash that banks have to lend, before you say interest income is going to increase, you are looking at two different variables. In simple terms, you say revenue is price times quantity. For banks, the price is the interest rate they charge, and the quantity, basically, the bulk of the quantity from which they make their revenue is the loan that they're able to give out to customers. Now, but what the CBN is concerned about is, now, the loans that you are giving out to customers is going to be charged at higher interest rates. That's if you go through a bank. But if you go through the CBN's, intervention funds, those funds typically or usually come at a cheaper rate compared to the rate that a bank would ordinarily charge. So when you look at it from the perspective of the CBN, they are just taking two contradictory, we can say. But on one hand, the increase in MPR signifies that we are aggressive on inflation, and they've also increased the CRR. They are also showing that they are aggressive on inflation. But then channeling funds to for intervention purposes, is just to say, we know that this action that we've taken, increase CRR, increase the MPR, is likely to, is going to lead to lower borrowings, is going to also impact growth negatively. But then the funds that they are putting out through the intervention loans is sort of to counterbalance some of the effects. Although it won't be enough, right? The amount of funds that the CBN will be able to give out through the intervention funds won't be enough to, to mute the impact of banks not being able to have enough liquidity to give out loans from their own end. But then those intervention loans are just to, and you remember that those intervention loans are targeted, they have specific sectors that, they are targeted towards, real sector. So that is what the CBN is saying. On one hand, we are fighting inflation, and we know that fighting inflation will cause a decline, is likely to decline in GDP growth, or even lead to a decline altogether, but those intervention funds are there at cheaper rates, to targeted sectors to, just partly offset some of the effects that we might see from, the negative effect that we might see from the, total action, the Monetary Policy Committee.
All right, still talking about the CBN's intervention. In 3 years, they've intervened with 9 trillion naira. And you've said, of course, they're targeted sectors, the real sector that they want to make impact. It will be interesting to know the value, the real value, or the impact of this 9 trillion naira. Even in this, because I know, for instance, there's the Anchor Borrowers program. But if you go to homes of a lot of Nigerians, they're still eating imported rice. So it will be interesting to know the real value and impact of this intervention by the CBN that has totaled 9 trillion naira in the economy in 3 years.
Yeah, I totally agree with. And, as an analyst, I think that is one of the major issues that I would say we have in Nigeria in terms of data, right? Availability of data, and even just not availability, real-time availability of data. So a lot of times the CBN governor has come out to say our intervention funds is this amount, it is given to this sector. We have the health sector, we have the manufacturing, we have the agricultural sector and all of that. But there is no real data to measure the impact. And as a matter of fact, the CBN governor has not been able to, all they tell us is, yes, these things are helping the economy and all of that, but where is the data for us to make, for anybody who is interested to make an independent assessment of the impact? That is not available, and that's cuts across the different policies that we have in Nigeria. One of the other policies that that comes to mind now is the RC 200, the AFEX policy that was taken earlier. Sometimes back as well. So CBN has said that it has brought in a lot of funds, but we are not seeing the data out there to be able to, for everybody to be able to assess what is happening in that particular sector. So I think that that's something for the for the authorities to actually look into. Nigerians need to see the data, analysts need to see the data, to be able to say, okay, these things are actually making impact. And I would say for free that, and I'm sure you are also aware of this, that if you ask a lot of farmers, right, those who are supposed to be targeted, who these loans are supposed to be channeled towards, many of them would actually say they don't actually get these things, So the question is, where do these things go to? Where do these funds go to? Do we have the Nigerian factor in some of these things? But if we don't have data to assess them, we won't really be able to speak to them beyond what the CBN governor has said. So I think it's something that is very important, and that's an important point that you've raised. But we don't have data to assess that.
Yeah, well, I guess as a journalist, we have to push the CBN to release those data so we can justify the 9 trillion naira that they've spent in 3 years. But just before we let you go, and really briefly now, the CBN has given the banks until Thursday to comply with the new CRR. And of course, there's been some criticism following that some of those institutions cannot meet up with this short notice. Why is the CBN in such a hurry for them to adopt this new one? Because if not, by Friday, then there are consequences waiting for them already. And the policy was just yesterday.
Exactly. So don't also know why the CBN is such in a hurry. And I think that this kind of thing gives us a lot of regulatory, I would say, put us in a place where you say regulatory uncertainty, right? The CBN just brought out a policy yesterday. There's usually that time that when new regulation is brought out, you give, parties that are involved time, or that will be affected, time to adjust. But then the CBN has said Thursday is a deadline. I wouldn't know why the CBN is in a hurry, but I think it's going to negatively affect in a couple of in terms of quickly liquidating whatever investment securities they have to meet up with the new CRR regulation. But also don't forget that a lot of Nigeria is actually higher than has always been higher than the minimum. A lot of banks have their effective CRR as high as 50%. So I wouldn't know if the CBN would also use part of the initiative that the CBN has brought out recently is to use the special CBN bills, that is special bills to sort of return part of the excess CRR to banks. Maybe CBN would take that. Some banks might use that as depositing that with the CBN to say, let's use this to, as a means of meeting up with that minimum CRR. But for a lot of banks are going to be affected, really, but I think that in the medium term, things are going to adjust for all banks.
All right, Damilare Ojo, team lead at Meristem. Thank you so much for sharing your thoughts with us. We do hope the CBN will answer us and give us the answer to some of those outstanding questions. We'll take a break now, and of course the conversation around the MPC's decision yesterday is an ongoing one, and of course the impact is one thing that would stay on the front burner for a couple of weeks at least. We'll take a break now. After the break, it's AFEX time here on Business Morning on Channels Television. Do stay with us. That's right, it's AFEX time now. The number of deals transacted on AFEX Commodity Exchange week on week increased by almost 41%. Omotola Kongwe is a market data and research analyst with AFEX. Joins us from our Abuja studio with the details of transactions for the week ended the 26th of September. Hi, Omotola, good morning. So what happened on the exchange?
Good morning. It's a pleasure to be here this morning. So across our commodities, we saw a mixed performance across our major indicators. Our total turnover declined by 27.50%, moving from 0.4 billion naira to 0.29 billion naira. Our total volume traded on the exchange also declined by 13.30%, declining from about 1.4 million contracts to 1.21 million contracts. However, our deals increased. Our number of deals increased by 40.67%, moving from 294 deals to 209 deals to close at 294 deals. Our benchmark indexes, however, remained flat. Our ACI, which is the AFEX Commodity Index, and our AFEX Export Index remained flat week on week. We saw a general decline across volume traded of most of the commodities, except for maize, which increased from 639,253 contracts to close at 1.1 million contracts at the end of trading week. Across our price, we saw an increase in the price of maize. There was a 2.44% increase in the price of maize to close at 210 naira for the week. Also, we saw a decline of 0.02% in the price of ginger, losing 0.18 naira to close the trading week at 1,020 naira 0.46 kobo. For more information about our commodities, kindly visit our website at africaexchange.com, and to join our trading platform, kindly download COMEX by AFEX on Play Store or iOS Store. That's market summary updates for the week. Thank you.
Thank you so much, Omotola, for that details of your transaction. Still staying with AFEX now, we'll talk about the issue of storage. We do know, we've talked a lot about this, storage and preservation of agricultural produce. Well, storage is essential for farmers to keep their produce. How can they design solutions that will deal with the challenges that they currently face in the sector with regards to agriculture? AFEX is interested in this, and we have joining us still from our Abuja studio the Vice President Corporate Services, Hemense Oka, still from our Abuja studio. Good morning, Mr. Oka. Thank you for your time this morning.
Good morning. Pleasure to be here.
Yeah, so this is obviously a challenge because when we talk about the issue of storage facility and preservation of crops, which is why we see during season of some crops, they are very available and very affordable. And then off season, they're hardly available and very expensive. What is AFEX interests in this?
Well, we're very interested in this because it's a problem that affects all of us. The current situation is quite bad. Figures are hard to actually come by, but people observe that close to 50% of smallholder farmers in this country do not have access to appropriate storage facilities. And in real terms, if you think about it, that means close to 20 million farmers do not have the opportunity to decide when to either consume their goods immediately, store it, or sell it off in the market. And without that power, they're going to leave a lot of money on the table. Because this is actually true value that could be accrued to the farmer, but now is being lost to whether that's infected by insects or rodents or even damaged by water, all as a result of using poor storage facilities. Right now they're using polythene bags or even drums to hold their goods, where the goal for us at AFEX is try and get them to start using more appropriate facilities such as standard warehouses, or even get them to a place of silo, because all this is going to mean more money back on their table, which is going to improve their livelihoods.
Yeah, and obviously improve food available in the country and help us deal with the challenge of food insecurity. And also, on the other hand, deal with post-harvest losses, which in Nigeria has been placed at about 50%. You know, how much impact is this lack of available or proper storage and preservation? How much has it affected food production across the distribution value chain in agriculture in Nigeria?
The effect is quite significant, actually, because it only means that we're going to have to continue to push and try and improve more or produce more. So our population is growing. That means the food demand is continuing to be on an increase. Land is going to be a constraint, very limited resource, as we're well aware. And this just adds more pressure on the production level in the country. But if you actually think about it, we continue to produce, but there are actually leakages that are taking place. And so if we can stop the leakage, you'll have a greater impact. It's like a bucket that you're filling with water that has a hole in it. Would you rather continue to fill that bucket with water or plug the gap? And so that's what we really need to do in this country, is figure out how to plug the gaps of poor storage facilities and stop the leakages that are actually taking place. Here at AFEX, storage is big for us. We have a network of warehouses across the country, and it's a shared service model. So any farmer that wants to take advantage of any price appreciation can bring in their goods to a warehouse. We store it for them for free for the first month, and then they have the ability to pay for longer and take the commodities out and sell whenever they choose to, whenever the price in the market goes up. And this way we can share the value across everybody along the value chain.
Yeah, impressive by AFEX there, even though it's just for a month that they can keep it for free. But what other policies or practices can Nigeria adopt, maybe on a national scale or more from AFEX, that could help in this challenge?
Sure. So financing will continue to be a challenge, and it's always going to be difficult to get funding for these kinds of projects. If you look across the country, a majority of infrastructure is being done by the government or through some sort of DFI enabled project. And it just shows that there's a challenge for the local banks to take this up due to the nature of these loans. It's a capex investment. The tenor doesn't always work, and opens them to a lot of risk. And so what's going to happen is we have to find alternative sources of funding for this, and maybe leverage capital markets, maybe leverage public-private partnerships in order to drive the funding that we need in the sector. But to give investors comfort, you need to be able to guarantee them that their money is actually going to come back to them at the end of the day. So this entails getting clear government policy around this, clear timelines, deliverables, action items, and knowing that the revenue is actually going to come back because the government has the technical capacity, along with the private sector, to execute on these deals.
Yeah, and when we look at all you've said, what does the future look like for investment in infrastructure for Africa?
So I think the future is bright, maybe because of the low point that we're actually starting from, but there's a lot of opportunity that we can take advantage of. So once you invest in infrastructure, you then add value to your commodities as you're able to store them and wait for price appreciation to take place before you sell them off. But by doing that, you then realize the true value in the commodities, and you want to do more infrastructure build. So it's almost like a recurring cycle that's taking place. So down the line, we're going to see more financing coming into this sector. We think more local capital is going to start to flow. There's also going to be other opportunities to actually leverage the assets. So more refinancing opportunities for the warehouse infrastructure that investors can leverage on. And finally, we see this global shift. I mean, it's demand-led, especially by a lot of foreign and European countries for more sustainable climate-sensitive infrastructure that's being built. And so all of that is just more opportunities for other investors to come into the market. And it's all going to be driven by growth and economic development that we're seeing take place.
All right. Well, we'll look forward to that bright future to become a reality. Imense Oka, Vice President, Corporate Services with AFEX. Thank you for your time this morning.
Thank you.
We have another market coming up, but after this break. That market coming up is coming up with Will Ibong. Hi, Will. Good morning.
Hi. Good morning, Nini.
MPC is come and gone. Huh?
Yes, MPC is gone and gone. And don't think the red we're seeing is the reaction from the market. No, it didn't react
because
to that.
I mean, the decision was announced at about 2 past 2 p.m.
And the markets were already closed about that.
Already made up its mind by that time. So at the close of market today, we'll know
what the market is saying. But I'm hearing some, tidbits that investors are going to hold. They were very impressed with the massive rate
I don't
hike.
think anybody saw that CRR. Not anybody. A lot of people did not see the CRR
coming.
Yes.
500 basis point increase. That's 5% increase for CRR. That's a lot.
That's
huge.
a lot. And I'm just wondering in my heart, in my mind, why the CBN is giving such a short notice that banks have to comply by Thursday, or else they face some consequences and sanction on Friday. And as I was discussing with one of the guests, they need time to adopt, and this is why we'll talk about uncertainty in the policies, that
really drive investors'
sentiment and all of that, so these are just part of it.
Well, the CBN is trying to explain that, in their
post-MPC
meeting they're having this morning, trying to explain the decisions, the reasons why they took the decisions they made yesterday. So we'll just see how the market and the banking sector, adjust to
My
this.
favorite banking, you mean?
Yes. So the markets really reversed Monday's gains. We saw a 0.39 gain on Monday, but yesterday reversed and it closed lower by 0.12% and at 49,161 points. Market cap is still at 26.517 trillion naira. Month-to-date loss, not much done there. Still 1.4% in a negative territory, while year-to-date is at 15.1%. That's still moderately fair for the equities market year-to-date. Now, total volume of trade increased by 72.9% yesterday to settle at 206 million units. Value 2.36 billion naira. up from the millions we had on Monday. Now deals, 3,777 deals yesterday. Transcore topped the gainers chart. It was by volume. I mean, not the gainers chart, the top trades by volume. It rose 38.46 million units of its shares were traded yesterday, while Zenith Bank, as Ini's favorite bank, was the most traded stock by value at 710.83 million naira. Now, sectoral performance, when we look at it, we see that three of the key sectors, banking, consumer, industrial goods, were down yesterday. Now, reminder, Access Core was one of the biggest triggers that pulled back the market yesterday. It really dropped the sector 0.65%. Now, consumer goods was also down 0.52%. Industrial was down. Only insurance and the oil and gas sector ticked upward in yesterday's trading session. Now, looking at the market breadth yesterday, it's still negative sentiments persisting in the market. Now, we move over to the bond market, where we saw bearish momentum, as average yields advanced by 14 basis points. The bond space, the yields are still dropping downwards versus, what we saw on Monday. Now, on the other end, the Treasury bills secondary market traded slightly bullish. Now, yields were going downwards as against what the bonds market, what we experienced yesterday. Now, let's bring in Caleb Alimi to give us more insight and more details as to how the market's going to perform, how it performed yesterday, and what's going to do post-MPC. Hello, Caleb. How are you doing today?
Hi, good morning, Will. Thanks for having me.
Now, Caleb, can you give us more insight into yesterday's trading session? We know that the CBN gave its decision on the MPR and the CRL yesterday. So how is that affecting banks, especially stocks, fixed income? I mean, the fixed income space. How did the markets react to that, if it did react, because the market was closed at the time the decision was made? And how do you think rates are going to react going forward?
Okay, so like you rightly mentioned, market was already closed as at the time the pronouncement was made. So there wasn't an opportunity to react. However, what we had noticed was a lot of market participants were expecting a 100 basis point increase, and so market was largely muted across the treasury bills and the bond space as well. But post-MPC, post the announcement, it came as a surprise at 150 basis points. A lot of people expected 100 basis points, like I mentioned. The reaction we expect to see today is higher interest rate, like we already know. There is an NTB auction today. The last stock rate for the one-year paper was at 9.5%. We expect at least 100 basis point movement in today's auction, given the fact that the benchmark rates has gone up and so many other rates will just generally track that. On the bond space, the market is open today on the bonds market, and bid-offer spreads are already very, very wide. We're seeing arbitrarily wide bid-offer spreads, and people are demanding higher rates generally. We expect that to persist, and that's how we expect the market to play out. Higher interest rate giving the direction by the 150 basis point hike by the MPC.
Already, the bond space was already reacting yesterday. We saw that it ticked upward yesterday. I'm not sure because of the MPC decision, but it was already trading higher as compared to the Treasury bills market, which was trading lower. And now the Treasury bills market is still trading below MPR and inflation. How do you think the market, you're talking about the gap, how do you think we can catch up, or how do you think the market can fill in this gap or close this gap?
So that depends on, the investors will demand one thing, the supplier will demand something else. The target of the debt management office is to keep the government borrowing cost as low as possible. So as much as investors continue to demand higher rate, they're still able to sort of control that rate. I don't think that gap is going to close up anytime soon. I expect the MPR to still significantly be above the NTB rate, to be significantly above the NTB rate.
Thank you so much, Caleb Alimi, fixed income dealer, FSDH Merchant Bank, for sharing your thoughts on the program with us this morning.
Thank you.
So we look at the NASD market, where, contrary to what the equities market performed, it was 0.9% up yesterday to close at 732.25 points. Market cap is still below the 1 trillion naira mark. I mean, 1 trillion naira mark is at 963.94 billion naira at that yesterday. And we saw other markets, other stocks going up. The decliners yesterday, I think 6 stocks were traded yesterday, and 18 deals were transacted in yesterday's trading session. So in the market, at least the unlisted market, had positive news for us yesterday.
Yeah, but we know that what's that level? It's 1 trillion naira. So we're yet to get there. I remember on Saturday I had a conversation with the managing director of NASD market, and he did outline some of their plans to try to boost the market and attract more investors and securities into the market. So I guess this is not the time, a level of a period of politics and all of that.
And investors are going to be more cautious, with the higher interest rates.
So maybe after the elections, we would see some of their plans come to fruition. But thank you so much for the market. See you at 1:30 for Business Incorporated. All right, we'll take a break now. When we come back from the break, it's London time, going to the UK with Juliana Olayinka. To stay with us on Business Morning here on Channels Television. Welcome back. Still watching Business Morning here on Channels Television. We head to our London studio now where Juliana is standing by. Juliana, good morning. Well, it seems like since they announced this mini budget on Friday, we've had the issue of tax cuts, hoping it to bring celebration and all, but everyone doesn't seem to have to be getting comfortable with it. Now, the IMF is also talking about this proposed tax cuts.
Good morning, Innie. You're absolutely right. It's been a series of dark days for the Chancellor Kwasi Kwarteng ever since on Monday he proposed £45 billion worth of tax cuts with no way of paying for it. And the criticism has come from all quarters. And this morning, the International Monetary Fund have also weighed in. Obviously, the IMF is a lender of last resort, so it's pretty rare for them to talk about Britain's domestic issues. But they are concerned, as are so many others, including investors, of course, because we've seen again this morning the FTSE as well as the pound have plunged yet again. I think the pound in Asian markets was just trading above $1.07, so still historically low. And what they're saying is that, look, these tax cuts are just not going to work for ordinary people. And in fact, what it's going to do is increase inequality at a time where the government needs to be looking at more targeted, focused lending. And that is, I would say, the issue from charity groups and the left with Kwasi Kwarteng's proposal, because, of course, that 45p tax cut or removal of the 45p tax rate is only going to help the richest people in this country, and there isn't as much that we were expecting for those who are on low or no incomes. Kwasi Kwarteng has tried to reassure markets and people in this country by saying, look, give it a chance, it will work, but time isn't really on his side. One thing he is going to do, which I discussed with you yesterday afternoon, Innie, is that he is going to be bringing forward his fiscal review. That is going to be taking place on the 23rd of November. So he will be outlining how this is going to be paid for, as well as giving forecasts from the Office for Budget Responsibility to have a really kind of forensic look at debt and how Britain is going to get itself out of this huge deficit it will be in.
Yeah, Julian, I just wonder in my mind if you'll be forced to reverse this plan. I don't know, but we'll just watch and see. And yet another issue they have to deal with is Royal Mail workers are going for strike, and they want for it to cover Black Friday and Cyber Monday, I guess, to make the strike more impactful.
Well, that's absolutely right. Again, we've seen a series of strikes across lots of sectors in the country over the past couple of months. And the Communication Workers Union, that represents a vast swathe of Royal Mail workers, conducted a strike yesterday. I believe they had 66% of people take part, and they had an overwhelming majority, so 93% of union members voted for this industrial action, similar to what we've seen from barristers, from teachers, from train drivers. They're not happy with pay and working conditions. Now, there was discussion between Royal Mail bosses and union bosses for some time. According to Royal Mail bosses, they are losing £1 million a day because it's a really competitive market they're trying to burst into, because, of course, they are known for sending letters. Most people don't send letters anymore, so they're trying to go into this parcel sector, but it is taking a long time for them. So they say they just cannot afford what union bosses are putting on the table. That being said, the unions are going ahead with this. It is going to hit some major days: Cyber Monday, Black Friday, the day where people can get really decent sales in the run-up to Christmas. Is it going to affect consumers? Not really. You may not get your package on that day, but you will be able to get it the day or so after. But still, not really a great look for Liz Truss's government at a time when they are pretty much on the edge.
Yes, you can say that again, Juliana. Kwasi and Liz Truss, they have a whole lot on their table to deal with. But we'll continue following that, and we'll talk to you at 1:30.
Talk to you then.
All right, then. Let's go to the final market for today, cryptocurrency. And Laddie, of course, is back and takes his sports. It's your sport, Laddie.
Well, not looking so good
Laddie,
again.
please tell me the MPC's decision has affected the crypto market.
No, it didn't.
Why? The Federal Reserve made the decision and it affected the crypto market.
It looks like the crypto market only cares about what the Fed really has to say.
Well, we're going to revolt in Nigeria until the crypto market starts reacting.
Yes.
The Naira should, I mean, raising rate by 150 basis, the Naira should be valued up like the dollar reacted, and the crypto market should fall.
Yeah, but I'm sure the NGX will do something. All right, let's see what's happening there now. We see the culprit again for the crypto market. That we see the DXY talking about the US dollar. That's hit that 114 points. We're seeing a minor pullback. Looking at the 1 minute chart right now, but we see the US dollar still ranging on. Let's look at the market cap. Now, we see the market cap there, talking about the market cap for the crypto market. That's $916.282 billion. And we see extreme fear, sentiment in the market, extreme fear still sitting there with investors right now. They're very afraid in the market. Let's see the market cap there now, $916.82 billion, way below that $1 trillion mark. There's down 5.79%. Volume traded $90.39 billion. And we see the Bitcoin dominance there still at 39.29%. Let's look at the price of Bitcoin there, 18,767. We did have that massive jump yesterday when the US dollar pulled back, got to about 20,000. Mad jump there, about 7%. All that gain erased, down 7.26%. Volume traded $55.06 billion. Let's look at the Ethereum now. $1,282. See Ethereum, they also hit hard, down 7.53%. Volume traded in Ethereum, see lower volume this morning, about $17.44 billion. So no altcoin is spared in this market right now. Let's bring in Olumide Additional now, financial market analyst. Tell us what's going on. Hello, Olumide, great to have you. Hello, Olumide. All right, we'll try and get Olumide again. Let's see what's happened with top alts by market cap there. See BNB there.
Hello.
Hello, Olumide. Okay, don't think you hear me. BNB there, down 5.56%, $269. Cardano, 43 cents, down 6.48%. We see eCash there, down about 5%. No alt is spared, but the biggest downer we're seeing this morning here, XRP, 42 cents, down 12.32%. It's a double-digit loss, but XRP has had quite a good run. You know, this month it was trading about 31 cents for the longest times in that 30-cent range, but it did get about 50 cents. That's about over 100%, about 60% pump there for XRP, but it's trading at 42 cents now. We're seeing a pullback with XRP. It looks like the XRP bulls, the XRP army are not pushing right now because we're seeing the DXY, that's the US dollar, hammering most of the currencies. Now, let's see if we have Olumide additional now. Do we have Olumide? Hello, Olumide. All right, Olumide. Let's move on now. Let's see what's topping the charts here. Talking about the top 5 gainers. See Quant, $137. That's up about 9.39% this morning. And we see RSR. This one's been trying to get up there. It's less than a cent there, up 8.96%. Some traders are looking at RSR to get some kind of a big move this season. Celsius there, up about 0.93%. This is getting quite a minor jump there in price. It's trading at $1.52. The CEO did resign recently. Talking about the CEO of Celsius there, and we saw the price of the token actually plummet when that news came out. But now we're seeing quite some, just a little green there, even though the market is really red today. And we see the stable coins in the top gainers list. When you see the stable coins in the top gainers list, you know that traders are trying to get some protection for their funds at this point. See USDC there, $1, about 0.01%. We see USDD there, just trading at $1. It's a stable coin. It has to be at $1. Let's look at the top 5 losers now. With CXRP there topping the top 100 losers, also down 12.24%, 42 cents. And we see NEO there, one of the old coins there, trading at $8.44, down 11.45%. LUNC, that's Luna Classic, less than a cent there, down 10.44%. This had a major move upward recently. It was trading about 50% up after we saw news from Binance there saying they had some kind of burn mechanism for the Luna network there. And we see Zcash, $54. That's down about 9.86%, and COMP, $58.74, down about 9.52%. So it's mostly red in the market, in the crypto market. We're seeing the US dollar now hammering all currencies. So no one is safe, at this point, with traders running into stable coins, trying to get, some kind of shield and hedge against the ravaging dollar at this time. So looking at the market right now, the crypto space, it's not insulated with what's happening in the world.
I heard you say when you see the stable coins are the top gainers, something is really, really wrong.
Exactly.
But what's actually pumping the dollar at this time? I mean, the Fed's decision had been made.
Yeah.
We saw it react, and then it tapered yesterday.
Exactly.
And now it's back on a bull run. I wonder what's driving it.
Well, geopolitics all over again. We're seeing those recession fears, start to rear its ugly head, at this time. And we're seeing what's happening, with Russia.
Yes.
Also,
and I think you discussed the Nord Stream issue this morning on Russia with that sabotage. Alleged sabotage with the Nord Stream. So all that will affect what's available, drive energy costs, and then we see it push up inflation.
So it's pushing up recession fears again, and obviously we know the traders are always ready to trade sentiment, with geopolitics and
even before they become reality.
Exactly, before it becomes reality.
All right, Laddie, thank you so much for that. Well, that's it on the program today. Thank you so much for being a part of it. 1:30, Business Incorporated will be here. Will Ibong will be giving you update from the world of business. I'll see you at 10 p.m. when I'll be reporting the stock market tonight. I'm Ili John Mekwa. Have a profitable business day.